Welcome to Coach Oge. This is another interesting section with me. In this video, I will attempt to answer this question. Why is Meta stock dropping? And then, is it a buy on dip or not? So this is a question everybody wants to find an answer to. Why? Because what Meta is a popular stock. That's the owner of Facebook, Instagram, and WhatsApp. So in the last 1 week, the stock had been dropping. You can see right now, this month it's already down by 0.79%. And then if I expand my charts, you would see that after touching a high of almost 530 USD with a double top, you can see how the stock is rejecting that key level. And right now, it's actually looking like one that would most likely dip back to 305. Now, the question is Meta going to dip down to 305? If it does, should I buy on dip? If it doesn't, is the price okay for me to enter? What's the current market price? 481.73. So this is what I will attempt to answer in this particular video section. If this is the first time you're watching this channel, kindly hit the subscription button or turn on the notification bell because I will be releasing more videos on different stocks in the US market and also Nigerian market. So I'm trying to expand Coach Olge platform right now to cover both Nigerian stock and US stocks. So meaning that you'll be able to watch my review on US stocks right here. And basically, I'll be looking at undervalued stocks. I'll be talking about great stocks. I'll be looking at popular stocks and then tell you whether they are undervalued or overvalued. What is the advantage of knowing whether a stock is undervalued or overvalued? Now, knowing whether it's undervalued or overvalued will help you um, stay out of that company or probably go in. Because if it's undervalued, you want to buy at a cheap price. If it's overvalued, you want to stay out completely. Do you understand? And then because you're going to hold for a long time, there's also need for you to carry out quality check on the company. So here we're going to look at fundamental analysis of Meta stock. We're also going to be looking at the fair value calculation. So the fundamental analysis will help us carry out health check of that company. The fair value analysis will then help us know whether at the current market price, is it cheap to buy or should we wait for the stock to dip further? So these are the questions we're going to ask. But then let's look at the business model of Meta. So Meta is a social networking platform that analyzes users' profile, interest, and then monetize it via ads. Monetize it via ads. So they own popular Facebook, Instagram, and WhatsApp. So what exactly do they do? They create value by connecting you, by helping you connect to your loved ones, and then they capture value by monetizing the platform by selling ad space. That's a summary of what Meta business is all about. So what's the performance of Meta so far? Now, so when I put this slide together, Meta is up by 153% in the last 5 years, 127% in the last 1 year, 54% in the last 6 months, and is down by 3.66% um, in the last 1 month. So that's the performance of Meta. So let's look at other things that we need to answer the question: is Meta a good buy? Now, look at this slide. Here we want to carry out fundamental analysis of Meta. Now, why is it important? Before you decide on whether a stock is good to buy for long term, you need to know the health of that company because you want to be sure that you're buying to a company that will survive different economic events, uncertainties. So fundamental analysis will help you carry out health check on Meta stock. So let's carry out health check on Meta stock. Is it a buy? So it's very important. Now, what does fundamental cover? There are a lot of data out there. They will tell you different things, but here, I want to help you streamline your fundamental analysis to certain things that you need to check. Once Meta passes through this health check, then it means it's a very strong stock. But if it doesn't pass through all this health check, then you need to stay away from the company stock. Now, before we proceed, I need you to learn how to analyze a company's stock. So there is a link in the description below where you will be able to see my course on how to pick great US company for investment. So this particular course will guide you, will help you understand how to pick stocks for investment. So go to the platform. I will drop this link in the description below. Click on it and get this course. This course will help you. Everything I'm going to share right here, they are wrapped in this course. They're just a portion of what this course covers. In this course, you will learn how to scan the market. Imagine being able to scan 10,000 companies and then be able to know which one is great. You know, the difference between a good company, the best company, and a great stock. So here you learn how to pick great companies. Do you understand? So that is what that course will help you. So when you go there, I'm also going to activate a 25% discount on the course, meaning at the point of checking out, just enter 25A as a coupon code. You will enjoy 25% discount on that course for being a subscriber on my YouTube channel. So let's move on. Now, this is the health check you need to carry out on Meta stock. If a stock is going to be a great stock, not good, not best, great stock, then it has to pass through all, not one, all, one, two, three, four. It has to must have a record of consistent growth in revenue, profit, and cash flow, conservative debt, must be profitable, then it must have some level of liquidity, which is very, very important. So the question now is metal a quality stock or not? Is metal a quality stock or not? Before you decide on whether it's a buy or not, you need to know whether it's a quality stock. If it's not a quality stock, then automatically it's not a buy. If it's not a quality stock, it is not a buy. So here we're going to look at Meta. Is it a quality stock or not? So let's look at Meta itself. Now, this is Meta on Yahoo Finance. I like to use Yahoo Finance for my analysis. It makes my job easier. So let's look at the first check. What's the first check? Consistent growth in revenue, profit, and cash flow. Does Meta meet this first check? Any stock that doesn't meet this first check, I am not buying at all. So let's look at Meta. Now, this is the Meta financial statement from 2020 down to date. So here we're looking for consistent growth in revenue. So look at total revenue of Meta. In 2020, 85.9, 2021, 117, 2022, 116. You can see a slight dip right here. And then 2023, 134. Now, in my video, I share certain metrics. Now, you might ask me, but we recorded a dip in 2022. Does it mean Meta is still a great company? If you watch my video, I will tell you why. There's a secret I applied right here. Whenever you notice a dip, remember when you're checking for consistent growth in revenue sales, it doesn't mean that the company will be recording consistent like every year. There are years where you will see a dip. But there's one thing I shared in my video that you need to watch out for. Once you spot that thing, then it means Meta or any other stock is still a great company. From here, Metal is still a great company. Now, from 116, we see a huge spike to 134. Can you see right here? A huge spike to 134. So there's a secret I shared in my video course on when even though a company is recording deep, how do you know? There are companies that would that go through temporary events. Do you understand? Temporary events. So if you don't understand the trick right here, you might just stay away from the company because you feel that, oh, there was a dip in some years. But there's a way to check whether that event is temporary or not. For temporary events, it means that the company will most likely bounce back. And I will show you what to watch out for. For permanent events, it means that the company has not recovered. So the idea is not to buy companies that are going through temporary events and are yet to recover. The idea is to buy companies that have recovered from that temporary event. That's the point. So here, Meta passes the checklist on consistent sales or revenue. So let's look at the consistent profit. Is Meta recording consistent profit? Look at the net profit of Meta 23, 29.1, 39, 23. You can see another dip right here, 39.3, 23, and then we're saying 39. You can see right here. So this is also a sign of consistent growth. Now, what is the cash flow position of Meta? The cash flow right here is free cash flow. So we're going to look at the cash flow statements of Meta. Let's look at the cash flow statement of Meta. Now, you see free cash flow 23.5, 28, 19, and 43.8. Yes, there is consistency in revenue, profit, and cash flow. So right here, I'm going to tick this as yes. We're going to tick this as yes, and then probably, let's give it a green color. A green color, yes. Now, conservative debt. That's the next one. Is Meta carrying a conservative debt? Your is Meta debt conservative? You know, conservative means the company is not too exposed. The company is managing the debt very well. The company is not trying to be exposed to debt to avoid interest rate risk. So low debt to equity means we're going to look at the total debt of Meta and then compare it to equity. And this low debt to equity must be below 1. I want to see low debt to equity below 1. So let's go to Meta financial statement. So how do you find that? You go to the balance sheet of Meta, and then what is the total debt position of Meta? This is it here. Total debt position of Meta is 37,234. Now, what is the total equity of Meta? Look at the total equity of Meta. Total equity of Meta, or here, you see the same thing, 153,168. So if we do 37,234, 37,234 divided by 153,168. 153,168. Sorry, I'm taking out the 00 because it's just going to give you the same thing. You can see here 0.24. Is it below 1? Yes. So it means that Meta passed this checklist. It means that Meta passed this checklist. So here, can you see? So let's look at interest coverage. Does Meta has impressive interest coverage? What does interest coverage mean? You're looking at the earnings before interest and tax against interest expenses. That means, is the company generating revenue or earnings that is large enough or sufficient enough to cover up for interest expenses? This is also very important because when a company is exposed to debt, the company should be able to generate enough revenue or enough earnings to cover up for their interest expenses without having to borrow. The implication of a company having a very low interest coverage is that it's going to be exposed to debt. It's going to borrow more because the company is tight. It's not generating enough revenue to pay debt, and it's going to borrow. That's one sign of impending problem in a company. If you want to see a sign of impending problem in a company, look at interest coverage. So what is Meta's earnings before interest and tax? 59 0.0252. All these are in thousands, so that's 59 billion. Now, what is Meta's interest expenses? Can you see here? 446,000. So if you do 59,052 divided by 446, 59,052 divided by 446, you can see here Meta has almost 132. Is very okay. That means the earnings of Meta can pay up interest expenses 132 times. And the standard for interest coverage is at least 1.5. So you're looking at 132 compared to 1.5. So does Meta pass this checklist? Yes. So come here, we type yes. Now remember, we are looking for a yes on all these items. We don't want to jump anyone. In short, from A to Z, it has to be yes. If we find no on any, that's the end of our analysis. So you can see Meta pass the first checklist, pass the second checklist, pass the third checklist. Does Meta has high profit margin? Standard of high profit for high profit margin is 10. Now, high profit margin is a sign that this company is enjoying competitive advantage because if a company is able to raise rates or raise its revenue, maybe advert rates, or if it's a company that's into manufacturing or retail space, raise its price without having to lose customer, you know automatically profit margin will be a lot more higher. So let's look at Meta's profit margin. So what are we looking at? We're looking at the net income of that company, which is 39,038. Yeah, this is it here against the revenue of 134. So if I do 39,038, 39,038 divided by what is the revenue? 134,902. 134,902. So you can see here 28%, 28%, which is sufficient, which is above industry standard. Now, by standard, some will say net profit above 10, 15% is fine. And then Meta is generating 28%. That means for every 1 naira generated, this company is keeping 28 cents as its profit. So did it pass this checklist? Yes, it passed this particular checklist. Now, what next again? Return on equity. Return on equity, we're looking at the net income or profit after tax of the company against the total common stock. So what is the net profit? 39,038. 39,038, and then let's locate the common stock. 39,038 divided by let's look at total equity, 153,168. 153,168. You can see here 25%. Now, by standard, they say return on equity above 15% is okay. And here Meta is reporting 25%. Did Meta pass the return on equity check? Yes, it does. So look at how Meta is gradually ticking all my checklists. Consistent growth in revenue, low debt to equity, impressive interest coverage, high profit margin, return on equity, and then we have a last two. Current ratio. Here we want to look at liquidity. Is Meta liquid enough? Liquidity helps you check ability of the company to pay up its short-term debt without having to borrow. So what is the current ratio? The current ratio here is you're looking at the current asset of the company against the current liability. Now, current assets are assets that you can immediately convert to cash in less than a year. Now, current liability are obligations that are also due in less than a year. So look at the current liability of Metal 31,960, and then look at the current asset Metal 85,365. So this current asset, you can see the makeup, cash and cash equivalents, receivable. So these are assets the company can immediately convert to cash in less than a year. So 85,365 85,365 divided by, look at the current liability of Meta, 31,960. 31,960. That gives us 2.67. What does that mean? It means that the company can pay up its short-term obligations without having to borrow. It can use its immediate cash and liquid assets to pay off its short-term obligation without having to borrow. And then the standard for current ratio most times it's 1.5 to 2, and Meta has 2.67. Does it pass that checklist? Yes, it does. You can see right here. So we have one final one. It's always painful sometimes when you carry out your analysis and then at the end of the day, you only have one that is remaining and you're not sure whether this company will meet or not. What is debt servicing ratio? This is one important metrics that I don't joke with. Debt servicing ratio is when you look at the ability of the company to use its current cash flow. It's looking at the current cash flow to pay up its interest expenses. So here we're looking at the cash flow generated from operation. Debt servicing and interest rate coverage, they are not the same. Interest rate coverage looks at the earnings of that company. And in that earnings, there could be cash and non-cash movement. But the when you look at the cash flow of the company here, operating cash flow of the company, it's looking at what you have with you, cash generated from operation. So what's the cash flow of Meta is 71,113, 71,113. So when you compare 71,113 to the interest expenses of, you can see here, let's look at interest expenses, 71,113 against interest, what you can see here, 71,113 divided by 446. Look at it here, 446. So if you look at it divided by 446, look at it here, 159. Note, interest coverage 132, debt servicing 159. It means that the cash flow generated from operation alone can pay up its interest expenses. So these are the checklists you need to carry out to be sure that this company is liquid enough. That means if Meta decide to pay up its interest today, you can do that confidently without having to blink or borrow any money somewhere. So here, Meta passed the debt servicing ratio. Now, can you see? So the question now is Meta a quality stock or not? My answer is yes, Meta is a quality stock. We are looking for stock that pass all these checklists: consistent growth in revenue, profit and cash flow, conservative debt, profitability like high profit margin, return on equity, current ratio, debt servicing ratio. Once a company can tick all these checkboxes that I share with you, then it's a quality company. Then it's a quality company. But the problem, the problem is that a lot of people don't know how to identify a quality company. You know, in the market, you have over 10,000 companies. How do you scan for these kind of companies? So the question is, how can I find a quality company like Meta? That's exactly what this video will answer. We help you see. This video covers screening. So you're going to see my basic screener that will help you check certain criteria. That means instead of trying to random check for one company to another, this screener will help you pick the best quality company in the market. That's exactly what this video will do for you. So here you can see that Meta passes all the checklists. Now, having passed all the checklists and is selling for at what price? It's selling for 481.73. After market hours is 482. The big question now is Meta a buy? What is the fair value of Meta? Is Meta a good buy right now, or should we wait for more dip? Because we said something. Should we buy Meta on dip? So knowing whether Meta is good to buy on dip depends on whether Meta is a quality stock or not, number one, or whether the price is okay for us to enter. The first thing is quality stock. Don't buy a lousy stock that is dropping. It's like you're going to catch a falling knife. But when you buy a bouncing ball that is dropping, what happens? You will have the opportunity to make money when the stock recovers. An example of a bouncing ball is a quality stock like Meta. Do you understand? So imagine finding kind of quality stock in the market. So when you look at Facebook, WhatsApp, and Instagram, these guys have a lot of opportunities still waiting. WhatsApp is yet to be fully monetized. Imagine that they finally monetize WhatsApp. What exactly will happen? What do you think will happen to the valuation of Meta? So how do we carry out our fair value check? How do you know whether metal is cheap or not? I have a standard Excel sheet that makes my job easier for me. Now, this Excel sheet, I also make it available to anybody that buys, everyone that buys into this course. So if you buy into this course, you have opportunity to key into um the Excel sheet that I've shared right here. So you don't have to start punching calculator or jumping from one site to another. This Excel sheet will help you calculate the fair value of Meta. So let's plug in the figures and look at what Meta is worth. Now, all I need to do is to enter the symbol of Meta, META. The Meta, enter the symbol, you can see right here, the current price of Meta is 481.73 based on the closing price. So let's look at the other numbers. What is the free cash flow? Every key terms you see here, from free cash flow, growth rates, terminal rates, discount rate, share outstanding, debt level, total cash and cash equivalents, I explain everything in this video course. Do you understand? So I don't have that time to go through them all over again because we have a lot of stocks to cover in this particular channel. So the idea is just to show you the value that you will get by assessing that course, and then show you what this course will help you do when it comes to picking great companies for investment. Now, let's look at the key numbers. So first thing I want to look at is Metal free cash flow. So what is Metal's free cash flow? You can see right here, Metal free cash flow is 43,847. You can see they are all in thousand. 43, that's for 3.87 billion. So for 3,847, I'll come here, 43,847,123,123. Yes. Now, what is Meta growth rate in first to 5 years? You know, it's important for you to understand a company's growth rate, which is the projected growth rate. Now, don't have to stress your head around that. Yahoo Finance will give you everything you need. So when you go to statistics here, at the bottom of the screen, you will see, I think, analysis. You go to analysis on Yahoo Finance. So Yahoo Finance already provide, you can see here, next 5 years, Meta is projected to grow by 26%. So you come here, enter 26 right here. Now, a company will not continue to grow by a certain figure for a long time. Now, it's assumed that in the next 5 years, if Meta is expected to grow by 26%, in 6 to 10 years, that growth may stall, that growth will reduce. So that's why we're using half of that 26%, meaning that in 6 to 10 years, Meta will dip, Meta growth might probably come down to 30%. These are projections. Now, what is the terminal rate of Meta? You can see terminal rate basically is I use GDP growth rate averagely, so 2%, discount rate 7.5%. In my video course, I shared how I arrived at 7.5%. This is basically dependent on the 10-year bond yield, the market and risk premium. So let's add more numbers. What's the share outstanding of Meta? What is share outstanding of Meta? I'll go to statistics. So you can see here is 2.19 billion ordinary shares. So here, 2.19 billion ordinary shares. This is the outstanding. Now, what's the debt level of Meta? What's the debt level? Meta total debt most recent quarter 37.92 billion. So the debt level is 37.92 billion. So we can see here 37.92 billion. That's the debt level. What's the cash and cash equivalent of Meta? 65.4. 65.4 billion. here. So this is it right here. So we've keyed in all the necessary figure, we've entered the free cash flow, the expected growth rate, the terminal rate, discount rate, share outstanding, debt level. So based on this, what is our projected fair value? What's our estimated fair value for Meta? Now, remember, Meta is selling for 481. So based on our sheet, the projected fair value of Meta should be around, you can see here, 1,489. So Meta should be selling for at least 1,489 based on the fair value. What's the current market price of Meta? 481. So what does that mean? It means Meta is grossly undervalued by 209.3%. Now, I didn't include this. What exactly does my Excel sheet does? You can see here, the Excel sheet is able to project the cash flow of Meta from year 1 into year 10. And then here you can see from year 1 to year 5, it's using 26% growth rates. And then from year 5 to year 10, it's using 13% growth rate. Now, even if I come down a little bit and say, let's go with 20% growth rate, based on, just to be fair, you can see Meta is still undervalued at 1,064. So it means that Meta is grossly undervalued. Meta stock is grossly undervalued. So if we're looking at 1,064, then it means that at the current market price right here, you should be buying Meta. Now, does that mean I should probably buy it immediately? So my strong advice right now is to mop up Meta bit by bit. Remember, it's a long-term investment. It's not a short term. So in the short term, the share price will fluctuate. Even as you continue to buy, Meta might even dip further. But knowing fully well that Meta is grossly undervalued at this current price means that this is an opportunity to buy Meta on dip. So every dip you see on Meta, you have to start buying more. Why? Because Meta is actually in a very strong uptrend right now. So here, are we going to buy on dip? Yes. So what you do for me is I will wait for the stock to dip a little bit. If you want, even if I want to buy, I might just buy a certain unit or maybe smaller unit, wait again for another dip, buy smaller units, wait again, buy smaller units until I'm able to enter immediately. Why am I confident of Meta going up? Because it's a quality stock. You can see here, it's a quality stock. A quality stock will always bounce back. A quality stock will always bounce back. It's just a matter of years. Just a matter of years. Before you know it, it will catch up. So you can see here, at some point, we will see a market crash from 379 down to 98. This was in 2022. But look at what happened. The company recovered significantly. So imagine someone that had carried out fair value on Meta at this point, and right now, the person is already sitting on 481, haven't entered at price around 100 USD. So here we've been able to establish the fact that Meta is a quality stock, number one, and number two, Meta is grossly undervalued. So if you're looking for a long-term investment or a stock you can hold for long term, Meta is one you should take advantage of. That means every dip that comes should probably get you to buy 1 or 2 units of Meta, continue to average down, continue to acquire more units, because every time, if the market recovers, this is one of the stock that would also recover. So when you buy a quality stock, it recovers faster because you're not the only one analyzing this stock. There are also institutional investors that are also looking into this market. So it's important you carry out your health check on company stock like this and able to establish the fact that this company is a buy or a sell. So these are summary of the things I share in this particular video course. So you will find the link to access this particular video course in the description below. You can click the link to get access to this. This will help you analyze any stock in the market. Don't just jump in or randomly into any stock. Try to know whether the stock is a quality company or undervalued. When you put these two together, imagine buying a quality company at an undervalued a quality company that is undervalued at a bargain price. It means you are holding a good man. Just a matter of time, this company will bounce. So if there are companies you want me to analyze, if there are good companies you want me to analyze their financial statements, please use the comment section and I will look at the name of the company. There are more companies that I'm going to analyze. There are a lot of them that I've already written down just to show you the value that this course will probably give you when you are able to access everything inside. I hope you got value from this video, and I hope we've been able to answer this question on why you should buy Meta on dip. So even if the stock is dropping, you are seeing an opportunity. This is a quality stock that is dropping, which means in a matter of time, these guys will bounce back and catch up with their fair value. So if this is the first time you're watching this video, kindly hit the subscription button, turn on the notification bell so that when I release quality videos like this or impressive recommendations like this, you'll be among the first to always get access to the stock I mentioned.